All right, if you're a trader, you know exactly what I'm talking about. You're staring at a chart and it just looks like a tangled mess of spaghetti, right? You're trying to find a clear signal in all that chaos. Well, today, we're diving into a tool that's designed to do just that, cut right through the noise.
So first up, let's talk about that very idea, transforming all that market chaos into something you can actually read and, use.
I mean, let's be honest. You've probably got multiple indicators, trend lines, price action, all of it just fighting for your attention. It's total information overload, and it can leave you completely frozen, not knowing what to do. But what if there was a cleaner way to see things?
What if instead of that mess, you could see the trend, the momentum, and the key levels all laid out in one clean, super intuitive visual? Well, that's the core idea we're going to unpack today.
And this is it. This is the Inrexea indicator. Its entire job, its whole purpose, is to take all that complicated market data and just organize it visually. So you can spend way less time guessing and a lot more time actually spotting real opportunities.
So how does it all work? Well, the heart and soul of this system is what I like to call the trend rainbow. It sounds kind of fun, but it's incredibly powerful. Let's break down exactly what these colorful lines are telling you.
Okay, first, a super quick primer. These lines are EMAs, which stands for exponential moving averages. Now, the key word there is exponential. Unlike a simple moving average, these guys react much faster to what's happening in the market right now, which, as you know, is absolutely crucial for timing your trades.
And here's the secret sauce. Each color has a very specific mission. The blue line, the 10 EMA, that's your scout. It tracks the fastest short-term momentum. The orange-red 20 gives you your immediate trend. The gold 50, that's your home base, a key medium-term level. And the purple and green lines, well, those are the big ones. The ones that show you the major trend that the big institutions are watching.
Now, when everything lines up perfectly, it's a thing of beauty. This is what a strong, healthy uptrend looks like. See how the lines are stacked in perfect order? Fast blue on top, slow green on the bottom. That is a crystal clear visual confirmation of bullish momentum. No guesswork needed.
And of course, it works the other way too. Check this out. See how those slower EMAs, the gold and purple, are now acting like a ceiling? They're capping the price. And the faster blue and orange-red lines have dived underneath? That's a classic, textbook sign that a bearish trend is taking over.
Okay, so knowing the trend on one chart is great, but that's only half the battle. You also need to know which markets are making moves in the first place, and that's where the live scanner comes in. See this little panel up in the top left corner? That's the market dashboard. Think of it as your own personal built-in scanner. It's constantly ranking the strongest and weakest markets of the day, and it updates every 2 seconds. It's live.
And reading it could not be any easier. Seriously. Green text means the symbol is up for the day, with the biggest winners right at the top. Red text means it's down, with the weakest ones at the bottom. And that little arrow? That just points to the chart you're looking at right now. Simple.
So your workflow becomes incredibly simple and fast. Step 1, scan the dashboard for the biggest movers. Step 2, spot one that looks interesting to you. And step 3, just click it. The indicator instantly loads that chart for you. It's all about efficiency.
All right, so now we can find a trending market. Let's get a little more precise. How can we spot the potential moment a trend is about to begin or reverse? This, my friends, is where crossovers come into play.
A crossover is pretty much exactly what it sounds like. A bullish cross happens when a faster, more nimble EMA, like our blue line, crosses above a slower one. It's an early signal that momentum is shifting to the upside. And a bearish cross? It's the exact opposite, a warning sign of a potential downtrend. Let's look at a real example here, zoomed right in. See that? The quick blue EMA 10 pushes up and slices right across the orange-red EMA 20. This is a classic signal that short-term buying pressure is starting to build, and it often happens right before a much bigger move.
Now, crossovers are awesome for catching new trends, but one of the most powerful classic trading strategies is buying the dip in an already existing uptrend. So let's look at how to master the pullback trade.
Yeah, as the user guide says, price almost never moves in a perfectly straight line. It moves in waves, right? It pushes up, and then it pulls back to take a breath before continuing. Those EMAs often act as dynamic support levels where you can look to get in.
Okay, now this right here is the money shot. Look at this chart.
The price is clearly in an uptrend, all the lines are stacked, it pulls back and just kisses that gold EMA 50 line, and then boom, it bounces hard, confirmed by that handy green arrow. This is a high probability entry signal to rejoin the trend.
You should really think of that gold EMA 50 as a flexible line in the sand. In an uptrend, as long as the price is staying above it and respecting it, the medium-term bullish trend is considered fully intact. It's the absolute key level to watch for these pullback opportunities.
So, let's just quickly recap the key takeaways here. First, use that stacked EMA rainbow to see the trend's strength in a single glance. Second, scan the market dashboard to find where the real action is today. Third, keep an eye out for those EMA crossovers to anticipate a change in direction. And finally, master that classic pullback trade by watching how the price reacts to that key gold EMA 50 line.
So by turning all that chaotic data into a clean visual story, you can start to see the market with so much more clarity. The only real question left is, now that you can see the signals, which market are you going to analyze first?